What's up investors, and welcome back to another video. Before we get into today's video, I want to say thank you. In the past week we've just hit 1800 subscribers. I appreciate the support so much and I feel blessed to have you guys as subscribers to the channel. Thank you so much, and I intend to keep bringing you as much quality content as I possibly can. So today I want to talk about Desktop Metal, ticker DM. This is a company that I spoke about before on the channel. I covered Desktop Metal back in March when it had dropped from its February highs. They have just released their Q1 financial results, and despite posting higher than expected losses, I have seen more than enough to suggest there's value here. So stick around and let me explain to you what I think of Desktop Metal. I think you're going to like what I have to say. So in today's video we're going to be looking at who are Desktop Metal. We will look at the very latest news and check out the latest financials and projections. We will look at what analysts think and see who is invested in Desktop Metal before doing some technical analysis. And finally we'll look at the management team and I'll give my conclusion on this stock. Before we get into the video, if you like the content, can I ask you to smash that like button? It literally costs nothing but helps me out so much, and it shows me you want to see more content like this. We're aiming for 100 likes in this video, let's make it happen. Subscribe to the channel if you're new and hit the bell notification so you never miss a video. Again, this is free and it's a great way to show your support for the channel. Make sure you watch the entire video and get all the information on offer. What are your price targets for Desktop Metal in both the short term and the long term? Leave a comment down below, I want to know what you think. I want to point out I'm not a financial advisor, this is not financial advice. Now let's get into it. Desktop Metal is a technology company that designs and markets 3D printing systems. Founded in 2015 and headquartered in Burlington, Massachusetts, the company had raised initial stage funding from investors such as Google Ventures, BMW and Ford, before going public by a reverse merger with Trine Acquisition Corporation in December 2020. The objective of Desktop Metal is to make metal and carbon fiber printing available to all engineers and designers and manufacturers. They are reinventing the way engineering and manufacturing teams produce parts, from prototyping through to mass production. Desktop Metal believes 3D printing will change the way parts are designed, manufactured and sold around the world. This level of 3D printing has only been made feasible in recent years through technological advances. Although 3D printing technology has been around since the 80s, and it has even been described as the fourth industrial revolution, DM was selected as one of the world's 30 most promising technology pioneering companies by the World Economic Forum and was named MIT Technology Review's list of 50 smartest companies. As we can see here, the additive manufacturing industry is very much in its early stages. It is currently very small compared to what it's forecast to be. At the moment the industry is valued to be worth around 12 billion. However, it is expected to grow by 25% cumulative annual growth rate over the next decade and reach around 146 billion by 2030. Desktop Metal are differentiating themselves from their competitors by pioneering their single pass jetting technology as the most suitable for true manufacturing environments, with the highest output, best in class quality at the lowest cost. As we can see here, they claim to offer the quickest production, producing the most parts, and being the only 3D printing company to be suited to large scale mass production. And this is done through their 4 different 3D printing systems. Number 1 is the fiber system. It's a composite printing system which prints continuous fiber reinforced parts with industrial grade fiberglass tape. The second is the studio system, which is an office friendly production system for one-off parts using metal. This system is aimed towards designers and engineers to print metal parts and prototypes. The shop system is a batch production system and produces fully customer ready metal parts, meaning that this system can produce end-use metal parts at unrivaled speed and quality. The production system is the latest of the DM systems. It's a high-speed mass production of metal parts designed for the factory floor. This comes in the form of either the P1 system or the P50 system and is considered to be Desktop Metal's game-changing production system. Each of the DM printing systems are designed to be easy to operate. They print excellent quality at high speeds and at a lower cost than was previously possible. Desktop Metal has some serious institutional investors, investment funds and partnerships invested in their company, and according to Simply Wall Street they are currently 65% undervalued. So let's take a look at some recent news before we get into this in more detail. On May 17th, DM acquire Adaptive 3D, adding best-in-class elastomer capabilities to growing materials portfolio. This provides best-in-class properties and provides entry into large and high-growth elastomer market, one of the killer applications, additive manufacturing. Adaptive 3D is a category leader in printed elastomers for additive manufacturing. Its products enable volume induced parts production via additive manufacturing of odorless, tough, strain-tolerant, tear-resistant, and biocompatible rubber and rubber-like materials. The company serves a broad customer base across consumer, healthcare, industrial, transportation, and oil and gas markets. The acquisition extends Adaptive 3D's existing partnership to pair tough rubber photoresins with EnvisionTech's Extreme 8K. The Extreme 8K printer is optimized for an area-wide polymer printing and is the largest build area production grade digital light processing 3D printer in the world. Coupled with Adaptive 3D's resins, customers can produce tough, durable parts quickly and in volume with premium surface quality, robust material properties, and high accuracy. This adds robust, flexible printing technology alongside the announcement some weeks ago of the release of Forest, which is a new tool using wood to print 3D objects. Beginning now, the company will also offer samples for designs online. Their list of products will include architectural accents, home products such as bowls, flower pots, and furniture pieces. DM CEO Rick Fulop says that many types of plastics and polymers used today can be replaced with sustainable manufactured and low and cost-effective wood parts. And with the whole world so focused on carbon emissions and reducing climate change by using renewable energy sources and renewable materials, the ability to replace plastics with wood parts could prove to be a very important arm of Desktop Metal's portfolio. According to this report, Desktop Metal also acquired a new technology asset from the sheet metal printing company Figure Machine Tools for $3.5 million. So before we get into the company's financials, one last piece of huge news. Since the time of my last video, Desktop Metal have announced the launch of Desktop Health, a new business line focused on AM solutions for dental orthodontic applications with the intention of using high-speed metal binding jetting to put Desktop Health in a strong position to develop advanced healthcare applications. On May 12th, Desktop Health received FDA clearance for Flexera, the next-gen 3D printed dentures. In my opinion, this is a huge development for DM. This opens up the dental prosthetics market, which is estimated to reach $3.8 billion by 2027. According to American Association of Oral Surgeons, 69% of adults aged 35 to 44 have lost at least one permanent tooth to an accident, gum disease, or failed root canal or tooth decay. So at nearly 3/4 of people, that's an absolutely huge market. Now let's take a look at the Q1 2021 financials that were released on the 17th. So here we can see that revenue was up 35% from the fourth quarter of 2020 to 11.3 million. They expanded their materials portfolio to over 225 materials across metal, composites, polymers, ceramics, and now wood and elastomers. Accelerated customer adoption, adding more customers in the first quarter of 2021 than all of 2020 combined. This shows the progress that the company is making. They've also introduced Forest, launched Flexera, and acquired Adaptive 3D printing. But importantly, there is a robust liquidity position with cash equivalents, and short-term investments of over 570 million as at March 31st, 2021. Then we can see here, they closed the EnvisionTech acquisition and began shipping two new area-wide polymer printers, the Extreme 8K and the Envision 1 HT. I talked about this in my last video. I can't state enough how huge I think this is. They completed the redemption of all outstanding public warrants in the first quarter of 2021 to streamline capital structure and enhance cash position, contributing 170 million to the cash position. Again, this is a huge plus for anyone who's looking to invest now. They grew the Desktop Metal team to over 470 employees. That's up from 180 in May 2020. That's a huge increase of 160% of the workforce. So now let's look at the financial highlights. We can see that revenue of 11.3 million is up 35% from the fourth quarter and up 234% from the first quarter 2020. This is all good, but this is what we were expecting. so there's nothing major here. Again, the net loss is big, maybe a bit bigger than we would have expected. Again, we see the assets of 572 million. However, importantly, they have reiterated their expectation of over 100 million of revenue in 2021, exiting the year with annualized revenue run rate of 160 million. This tells me that Desktop Metal have something big lined up for this year. We had revenue of 11 million this quarter and they still expect to have 100 million by the end of the year, which would mean a 200% revenue increase each quarter just to meet that expectation without exceeding it. Looking here at the income statement, we can see that total revenue of 11.3 million, giving a gross loss of $500,000 after deducting operating expenses and deducting the loss due to change in fair value of warrant liability. We are left with a huge loss of 87 million. The income tax benefit is then taken away, giving us a net loss for the period of $59 million. Looking at the balance sheet, we can see that we have total assets of 987 million and total liabilities of 48 million, giving us an asset to liability ratio of 20:1, which is fantastic and is an improvement on the previous quarter's ratio of 5:1. Of this, 622 is in current assets, which includes 416 million of cash. As we've seen already, the company is due to make significant losses throughout the rest of the year and into next year. So having all this cash at hand is very important for a growth company. So while I was reading through the notes, I came across this. In the long term, we believe that the COVID-19 pandemic will encourage organizations to reassess their supply chain structure and may accelerate their adoption of solutions such as AM, which could allow for greater flexibility and reduced reliance on overseas manufacturing. This is a very interesting concept, but it's very easy for me to agree with this. Over the course of the past year, there's been numerous well-documented occasions where companies or even countries have been thrown into crisis due to supply chain issues. I believe we could see these 3D printing technology machines be implemented far more widespread to combat these issues. Another thing that I looked through in the notes for is the cost of sales. I don't like seeing gross losses, so I wanted to see what the gross loss was made up of. And as we can see here, $1.1 million was due to amortization from intangible assets acquired in the EnvisionTech acquisition. Without this, there would have been a small gross profit. And finally, the fair value warrant liability cost for the year is a result of the remeasurement and then all the private placement warrants being exercised, so there is no outstanding warrant liability. Now let's look at the charts over the last 6 months. I was going to talk about the Desktop Metal management team, but in order to keep this video from being too long, I decided to leave it out. If you're interested in the management team, take a look at my previous video where I went into detail about CEO Rick Fulop and Johan Meyenberg, as well as taking a quick look at the rest of the management team. So we can see here that the stock was trading about its $10 floor while it was still Trine Acquisition Corporation before going up to about $27 around the time of the merger, and like so many SPACs, once the merger was completed, it dropped back down to roughly about 15 before once again hitting highs in February of $35 just as the market began to crash. As we see here from the yellow line indicating that we were in a very steep downward trend from February right through until April. Since hitting the low point in mid-April, DM has been moving fairly sideways between $10 and $14, hitting both these lines of support and resistance on numerous occasions. I think it's highly unlikely that DM will drop much further than its current valuation. On tip ranks, we can see that there's an average price target of $21.25, with a high forecast of $34 and a low forecast of $11. This average price represents a 63% increase from the last price of $13. Looking at market beat, we can see that DM is trading in the middle of its 50-day range and at the very low end of its 52-week range. We can see that of the analysts covering Desktop Metal, none of these price targets and ratings have been set recently. The most recent one was a target of $11 set on April Fool's Day, so I'm not going to take that seriously. Looking at Simply Wall Street, they have Desktop Metal undervalued by 65% from its current price to a fair price of 38. For the forecast annual growth rate, DM is forecast to become profitable over the next 3 years, and as we've seen from the financials, they have enough cash runway already to go that distance. Looking at the ownership breakdown, we can see that the general public owns 23% of shares, institutions, firms own 55%, with insiders owning 17.5%. Altogether, that's very promising. And of the top shareholders, CEO Rick Fulop owns 9%, New Enterprise Associates own 11%, and other well-known names such as Vanguard, BlackRock, and ARK Invest all have sizable shareholdings. So guys, that brings us to the end of the video. Before I give you my final thoughts on Desktop Metal, what is your price target? Leave a comment down below, I want to know what you think. I hope you've enjoyed the content and that I've shared some information with you that you weren't already aware of. If you're new to the channel, hit that subscribe button and bell notification. I'll be running a competition with prizes next month for subscribers. Like and subscribe to take part, more details coming soon. So what do I think? Desktop Metal is a company that I like, and I have liked for a long time. I owned shares when they were still a SPAC and made a nice profit selling on the merger date. I bought back a small position in March and will be looking to add to this in the coming weeks and months. From a stock buying point of view, it's hard to determine the bottom when the stock has fallen so much over the last few months. But as I've shown on my charts, I think this decline is coming to an end now and the stock is starting to level out. I think the Q1 results set off a huge drop, and I wish I'd been in a position to buy that dip because there was a serious overreaction to the results that were pretty much in line with what any reasonable analyst would expect. I see this as a very good opportunity to buy into the stock. Depending on where it goes in the coming days, I will consider adding. And if we break over the blue line from my technical chart, I will add as well, as I believe this might be the start of a good run up. But this is just my opinion. If anyone is thinking about buying this stock, I encourage you to form your own opinion through research and do not take this video in any way as financial advice. Thanks for watching. What are your thoughts? What are your price targets? Catch you in the next one.